Oscar nominations are out. The nominations for the 95th Annual Academy Awards were announced this morning. What's interesting about the Academy Awards is it used to be a real big thing on prime time. And every year the ratings go down a little bit more, a little bit more, a little bit more. It used to be the Super Bowl of commercials where they knew that they had you for 3 hours. And I would say it's not so much now. A phrase that I never ever thought would come out of my mouth. And it's not about Will Smith's wife. Top Gun Maverick is nominated for Best Picture. That's, to me, kind of sad. I think that movie was a fever dream. I think he died in the first 5 minutes. Not to ruin it for you, but it was a pretty awful film. Growing up in the military, none of that would happen. Women Talking, that was a fantastic movie. Sarah Polley did a what it's like to be in a cult where the women are getting raped by men who are told them, just settle down there, little lady. And it was based on a true story. It's crazy. Elvis was fun to watch, and that's all my reviews. Thank you very much. Academy Awards coming up very soon. Let's bring on Tony Mendez from BayAreaLoanSource.com. It's BayAreaLoanSource.com. He does all of my loans, which is interesting to note. He's done all of them except for I think the very first one or the second one. That's good to know. How are you, Mr. Mendez? On top of all of this stuff, you do first-time home buyers, you do private money, hybrid private money, interest-only, investor loans, conventional loans, renovation loans, reverse mortgages. You need a loan, he'll get it done. Tony, how are you?
Good morning. I'm doing well.
So let's talk about some real estate thoughts, because I'm staying normal. I'm staying consistent. I haven't changed in the last year. I still expect to pick up another investment property for income and retirement, or my retirement home, hopefully at the end of 2023, start of 2024. Staying normal is a big thing for me. Shopping for a home loan has always freaked people out because they think they can outsmart the system. They think they can call Tony and say, how much can I get? And what's my rate going to be? And they call someone else, like maybe Bank of America, a local bank on the corner of their small hometown. And Bank of America says something slightly different. Why is it so different? Why is it like price shopping isn't a menu, a prefix with a good credit score? The job? I don't know.
Well, there's a couple of reasons why it's so different from one type of lender to another, or to a bank or to a broker, because they're all trying different kind of angles to get your attention. Some of them are going to aim towards a better rate. I think that's what's going to attract you. Or some are going to aim towards a better cost, regardless of the rate. And some are going to look for a combination. And it's really hard to nail down which one actually is the better deal because of the way that rate and price work. For example, the higher the rate, the lower the cost. The lower the rate, the higher the cost. So it depends on how you're getting presented that. And then prices change every day. So it makes it really hard for a consumer to go and say, I'm going to get a quote on Monday and they get another quote on Friday, when they have time between, their work, their kids or whatever, and have that quote actually be accurate. So it does get really kind of difficult.
Yeah, I've known people in the mortgage industry, and I would never use a local bank because I don't think they have a diversified product. Or even a credit union, maybe a credit union. Okay, maybe a credit union. But to me, one day when I saw you had what was called, I think it was called Loan Sniffer 20 years ago. And it would literally like Loan Sifter. Okay, Sniffer sounds better. I like it, but Sifter it is. You punch in a couple details, my height, my weight, my preferences. And it would show you like 20 loans, and you wouldn't show me the screen. You go, yeah, I can get you a loan. And then in your head, like you can say, I know people in the mortgage industry, Tony, who will be like, I'm not going to do a loan unless I make at least $5,000. I've known people that are like, I'm not going to do a loan unless I make $10,000. It's not going to be worth my time. And that's why price and rate sometimes differ. And there's a lot of product out there. And sometimes like a mortgage broker, a bank will say, we want to get loans done in February. So let's cut our fees. So there's a lot of product out there, and to be a good lender like you have to have the ability to see all the product that's out there. Is that fair to say?
Very well said. Yeah, very well said. The business is, next.
Finish your thought. The business is?
Yeah. Well, the business is a little difficult, especially today when a lot of these banks and loan originators and brokers and lenders, they're all very eager to get business. Everything's slowed down, especially refinances. We've seen that hit, 30-year lows. So they're really trying to get your attention with some sort of offer, whether you qualify or not. We've actually seen some lenders just give out pre-approvals for buyers. They aren't even qualified, and then they end up switching products. So it's even a little tougher today. So it just means you got to pay more attention, do a little bit more research before you really go out there and make that commitment on a purchase.
My son has a girlfriend who he doesn't even hold hands with, but they're boyfriend girlfriend, and her father needed a loan, and we were talking one day, and he was being led down a path that I don't think he was going to get a loan. So I was like, you should talk to my friend Tony, because he gets loans done, and you're going to find that you're not going to have a home right before school starts if you're not careful. So just throwing that out there, that's good endorsement for you. Let's talk about low down payment buyers. Are they a unicorn? Are they for real? Can you get away without a down payment now? What's the minimum down payment you're seeing? Is more better? What's happening in the world of down payments?
Well, low down payment products have always been there. It's the sellers and the prices that really needed to work. Right now, we're looking at about 21% of the homes in the United States are selling above ask price. That's not a lot compared to where it was a year or two ago. And what that means is that a lot of these low down payment buyers were being priced out because the asking price was so much higher than the market price. So their down payment was getting eaten up by the seller. So they weren't able to compete with all of the other buyers out there that were, had a little bit more down, 15, 20, 30% down. So if you had a 3.5% down FHA loan, but 3.5% of it had to go over asking price or over market price, they weren't able to compete with somebody putting 20% down because they could absorb a little bit of that extra money going to the seller. But now that the market is leveled off, where some homes are selling close or even under market price because sellers are trying to get rid of these houses and attract them in this way, low down payment buyers are now the hottest thing. So most of the transactions we're doing right now are anywhere between 10 and 5% because it actually works.
I'm never going to write another book. I don't like the process of it. I know people want me to, but if I were, one of my chapters would be, I bought a home in my 20s, 30s, 40s, and 50s. Probably if I were to revise the book, it'd be 60s as well. I bring that up because I think it's something that stresses people out. And in hindsight, it's not a bad roadmap for people. Try to buy one piece of property every 10 years. It's a start, right?
Yeah, and this is what a lot of people are thinking right now. And, but we also have to remember that a lot of these people have been sitting on the sidelines watching. You can go back to even 2015 or 16, watching home prices go up and they're, I'm going to wait. Meanwhile, rates came down and then boom. It just, the whole market exploded between, from basically the beginning of 2020, COVID, all the way to the end of last year. And these people have been waiting for so long, and they've had that mentality about, I want to buy a house, I want to buy a house, I want to buy a house. They get kids, They want to find the right school district. And it just keeps going on. And it really is something that we still have that American dream about buying a house and then being able to move to another house to be in a better school district and then eventually a retirement home. And it has to start somewhere, and it's really working for some of these people who are putting that saving the money, fixing their credit, and really making things work so that they can start that dream.
In my generation, I was able to do my 20s, 30s, 40s, and 50s. My kids may not, so I may have to give them a down payment in their 20s to get a home. But I'd still like them to kind of follow my track record because I don't want them to turn 45, not own a home, and then go, oh my God, I have to own a home. And that's when the bad decisions start coming in, when people start panicking. I have to do this, whether it's buy stocks or buy a home. There's a lot of psychology in planning this out intelligently. Any last thoughts? I guess maybe quickly plug your show today and your podcast that's out there.
So it's tomorrow, Wednesdays at 2 p.m. to 3 p.m.
Mm-hmm.
And then
that's right. I pulled you in one day early. I thought today was Wednesday, but it's Tuesday, so it's tomorrow.
No problem. It's BayAreaLoanSources.com is the website. Classic Home Loans is the broker. We do pretty much everything. Our show is pretty good about keeping people up to date with like the trends. We try to stay away from the numbers as much as we can, just the trends, and then We love getting people to call in. Same station, just a different time and different day.
People can find you at BayAreaLoanSource.com. If they need a referral to you and they forget your name, they can always find me, drop me an email and say, who was that guy on his show? Thanks very much. It's Tony Mendez with BayAreaLoanSource.com. I'm not going to say I'm in love with my own voice, but I like, as I've gotten older, things have come into focus a little bit more. And it was just recently I realized I bought a home in my 20s, my 30s, my 40s, and my 50s. And my generation, I'm going to say, my kids' generation won't be able to copy that formula. I wasn't able to do what my dad did and buy a home for $1. I'm not getting your time cue. Sorry. So Bay Area home prices fell more than anywhere else in the United States last month. I try not to get caught up in that because I look at it as I'm buying a home in my 20s, my 30s, my 40s, and my 50s, right? And one of the homes that I bought in my 30s was just recently upgraded in my 50s. I don't know if you can see how that worked, but then the rental property I bought in my 20s, they're all working the right way. But I've taken the timing it out of it. It's been a 10-year thing. Makes it a lot easier for me. You can find me online at Rob Black Show, Twitter, Rob Black Show, YouTube, Rob Black Show. I'm Rob Black.